All right, how's everybody doing this evening? Listen, I wanted to kind of jump on and get back into the swing of things of me doing some training for the team. I haven't been doing it because of the onslaught of promotional, which started back in December, and so even after December, we heading into yet another promotion. But what I wanted to do was slide a couple of trainings in here as we end the tax season. Uh, in the past weeks, or probably past month or so, been getting an onslaught of calls about understanding taxes, particularly that our business owners, our business partners, shall I say, are having some time or some issues with their tax preparers because the taxpayers don't understand the type of deductions that we are claiming for our business. So what I wanted to do is real quick. This is probably old for some and probably new to others, but this is one of my old training webinars or that I did, or shall I say, training presentation that I did a while back with the other team members. So I basically just dusted off and just say, we got a new flux of new folks. So I wanted to kind of help them understand what's the difference between tax credit versus tax deductions. Real quick, before we get into the presentation, a couple of announcements. Make sure you log into your back office. We got the Cash Flow Mania celebration coming up. That's going to be in Atlanta, Georgia, on June 17th through the 18th. That's the corporate My Econ Cash Flow Mania celebration in Atlanta, Georgia. That's on June 17th through the 18th. When you log in and click on the banner, it'll give you all the agenda item, the hotel stay, things of that nature, and so you can get all your information from there. Also, Game Changer is also in Atlanta, but that's in October 14th through the 16th. All right. And the last announcement, we all know right now we're going through a promotion, which is the Max Out 2016 promo. So, promote it, educate, and expose so we can close. All right. All right. So let's jump on into the training here real quick. So I can get my mouse to work here. So for those who don't know me, those who are fairly new, my name is Cedric Jenkins. I am a federal employee. I'm an IT specialist. I've been working for the federal government now for about 27 years. I retired from the military back in 2013 of 28 years. And so all along while I was working, I thought by me, having the jobs that I have was going to lead me to my financial success. But I later found out that just relying on my W-2 income by itself was not going to get me there. I didn't know it at the time until I came across the information. But before I came across this information 23 months ago, here's my situation. So before my econ, this is how much I was giving away monthly in taxes. I was throwing away $1,100 each month to taxes. And as a consequence to that, in the course of 20 years, look how much money I gave away in overpaid taxes. And I don't know about y'all, $375,000 is a lot of money. I don't know about y'all, but that's a lot of money. But I was giving that away unwillingly and not knowing it. I also had about $50,000 worth of consumer debt. All right, personal expenses typically were just going out the window toward my lifestyle. Not saying that I ain't gonna say I had good money practice because the $50,000 should show that I didn't. Very little education to even know what to do with the money that I was already earning. And as a consequence, didn't have anything in retirement, if any, right? So didn't have. So this was my financial situation 23 months ago. Then lo and behold, I came across my econ. Okay, and so in my econ, I started learning three smart money principles, right? And I learned these principles from these two gentlemen here. The founder, Mr. Ivy Stokes, and the co-founder is Mr. Alvin Curry. When I first started the business, every month, first Saturday of the month, I go up to Atlanta and I send in and listen to either Ivy Stokes or Alvin Curry. If not both, one or the other. I started listening to it more than Alvin Curry than I did Ivy Stokes because Mr. Alvin Curry, he kind of goes real deep into tax strategies. And so as I started learning those tax strategies, then those I start applying them, and then I start seeing a difference. But then I got a little bit more intrigued with the tax strategy because of the fact I knew that I gave away $375,000, and so my thing was it stops here. So I wanted to find out how much more am I leaving out on the table. Hold on. Message. Let's see. Hold on for a sec. Hey, do me a favor. Can everybody see my screen? Type in the chat box or come off mute and let me know.
Yeah.
Yes, I can see your screen, Cedric.
Okay. I had just got a message that I might not be sharing my screen for some reason, and that came out of the app itself. Okay. Just want to make sure everybody can see it. All right. So moving on. So I got a little bit more intrigued because I was saying I wanted to see how much more money that I was losing on the table. So as I started getting more intrigued, I start connecting with other folks. So here's the other inner circle folks that I started getting connected to. This gentleman here, his name is Dr. Ron Mueller, and he has his own business, and he specializes. His business is called the Home Business Tax Savings Learning Center, but he specializes in self-employed tax deduction, tax laws for self-employed small business owners, right? And so I got in his inner circle, and I started getting more education from him in regarding to how taxes work, along with using my econ business. For those who do not know much about him, this is one of the books that the two books that he's really notable for is the Home Business Tax Savings Made Easy. The 8th edition, I had that book, but he just came out with a 10th edition that I'm looking to get because there's some new tax code that came out, and that's going to come out in that new edition. But he also wrote it's not how much you keep that counts, now how much you make. So those are two good reads for you. So I started getting more information from him, started applying it, started seeing some more differences. Then I later on got into an inner circle with another gentleman. And this gentleman is by the name of Mr. Chuck Moss. Now, for those who do not know, this is my first year. I started running a tax business, and the reason being, I saw there was a need. When I started my econ, I knew that tax preparers was not up on their tax code. And so after I started looking around and started interviewing CPAs and tax professionals, hardly any of them knew about it or wanted to deal with them. So I knew that I needed to do something. I wind up doing my own taxes my first year and being in my econ because I couldn't find anybody. But I later came to grips that this is something that was needed for self-employed, for all of our self-employed business owners, because that's what's happening now. You're starting to see a trend, if you haven't already seen it, right? you're starting to see more and more people, more and more individuals and families are considering home-based business or being self-employed, going into entrepreneurship because the job market and the inequality there, you just can't rely on just one source of income, which is your W-2. So everybody's looking now to find out other ways of bringing in more money or additional income, shall I say. So the booming trend is starting a home-based business. Unfortunately, we don't have enough tax professionals that understand the self-employed tax laws. Okay, so what I did was saw a need to say, let me help out my fellow business owners and say, I'm in the trenches with them. Why not help them? And so that's why I became a tax professional, right? So why did I go through all this about me? It really isn't about me. It's about the information and what the information done for me, right? And we all have that same opportunity to where we can take the same information and develop and evolve into something different, okay? So when I start applying this information, look what's happening. Look how my financial situation changed. This is my personal financial situation here. You remember me being taxed or giving away $1,100? Well, I fixed that through correctly doing the W-4. When I did that, I dropped my tax rate down to 4.81%. Okay, 4.81%. I started leveraging my and this is what we all doing right here. We took our personal expenses and converted into business expenses. Now our lifestyle is tax deductible, right? But also look what's happening. I was getting my personal expenses got converted to business expenses, and when I did that, look what happened to my federal and state refund. Now to break that up, that was a $3,054 federal return and a $2,700 state return, all because my business allowed me to gain business expenses, right? Had I not had that, right, I would have been owing the government $7,000 because Old-Said-He Said and his wife, they are six-figure income earners combined, and that looks good on paper. While it looks good on paper, it just looked good on paper. That's just it. We still wasn't seeing the money at all because Uncle Sam used to take out throughout the course of the year and then still hit me at the end of the year. So we changed that. We changed the game up. Now look how much debt I done cleared. That actually is a little bit more than that. I would say this is roughly. I need to go into my my cash flow strategy to see where I'm tracking at. But that's probably around about $31,000. And reason why I know, there's two big, huge consumer debt that I got rid of. The first one I had was USAA. That was a $10,000 credit card debt, maxed out. The credit card limit was $10,000. The balance was $10,000. Got rid of it. Next one, Navy Federal credit. The credit line with that was $20,000. Guess what? I had a $20,000 balance on that. So just between those two cards, I had $30,000 worth of debt easy. Both of those cards are gone in 23 months. Both of those cards are gone. So start getting my financial IQ up. Start changing my retirement plan. Now I know where I'm going because I got a financial GPS. And then yes, I'm earning extra. I'm earning business income because I'm showing folks the same things that I'm doing. Okay, I'm showing folks the same thing that I'm doing. All I'm doing is showing them how to minimize their taxes, minimize their debt, and minimize their expenses. Okay. All right. So let's get into what we really came here for. But I want to show y'all how information can change a situation, right? So we are all in a position where we getting a wealth of information that can really be life changing if we allow it to. All right. if we allow it to. So let's get into it. Tax credit versus tax deductions. What is that all about, Sid? What is that all about? Well, let's go over some known facts first. Here's some known facts. I'm not going to read them all. I'm just going to let y'all glance at them, okay? That's a lot of words in the tax code, y'all. 11 Bibles. That's a lot of words. And we all wonder why when we talk about taxes and when the word taxes come up and then it equates to IRS, we get afraid because of all the stuff is written, all the code is written within those 9 million words. I hear echo. If you will, go ahead, put yourself back on mute, please. So here's the thing. Let's use, because the tax laws are written, so let's use the tax laws to our advantage, particularly the home-based business or the self-employed the tax codes. All right, let's use that to our advantage. Here's some other stats. Remember I talked earlier about the trend of home-based business, self-employed business owners, right? Here's some facts. I was on the Census Bureau website right before the call, was trying to get me some updated numbers, but I couldn't get the numbers fast enough to update this chart. But this should give you an idea of the trend of small business. Okay, and the reason being is, again, we have families are looking for more ways to supplement their income, and Congress know it. And so because of that, Congress passed special laws for the intent purpose of encouraging and rewarding home-based business owners. Why? It stimulates the economy. Okay? Those are the folks who get the tax breaks. Those who stimulate the economy are the ones who are given the tax breaks. So we have to put ourselves in a position where we are getting those tax breaks, right? But we got to stimulate the economy. All right? So what is a tax credit? So basically, here's what a tax credit is. Tax credit and tax deduction, they kind of work. They both lower your tax liability, but they do it in different manners, okay? And when we talk about tax credits versus tax deductions, a lot of us think it's one and the same. It's only one and the same because it helps lower your tax liability, right? But they both do it in different manners. So here's what a tax credit does. Tax credits, all it does, it reduces your liability dollar for dollar. So in other words, let's say that you owe the federal government $3,000 in taxes, okay? And so you have a child under the age of 17, which means you'll qualify for a child tax credit, which equates to about $1,000 worth of a tax credit. And then also you'll probably, if you don't earn more than $47,000, then you'll get an earned income credit. Let's just say between both of those credits, you get $1,000 tax credit from each. So that's $2,000. So instead of you owing $3,000 in federal taxes, you only owe $1,000 because you're going to subtract your tax credit from the amount that you owe. That's what tax credit does. It subtracts directly from what you owe to Uncle Sam. Tax deductions. Works a little bit different. So tax deductions, they lower your taxable income based on the tax bracket that you're currently sitting in from your total wages. So say for instance, you're earning $50,000 in total wages. That's your taxable income. Okay. If you have tax deductions of $20,000, then guess what? Now that $20,000 is subtracted from your total income. So instead of getting taxed on $50,000, you're going to get taxed on $30,000. Okay? That's a big difference. Instead of you getting taxed on $50,000, you're getting taxed on $30,000. So that's how tax deduction work. Just so y'all know, we're not here to accumulate tax credits. We're here to accumulate tax deduction because tax deductions give us the biggest tax savings. I'll prove it to you in the next slide. Here, and look, pay attention to the link that I'm referencing. Y'all always know, if y'all follow me, I'm always referencing something because I want everybody to learn it themselves. It's not about what Cedric knows, it's about what Cedric can show you to where you can go get self-educated yourself. But here, I took the liberty of, all I did was copy and paste. It ain't no secret. I copy and paste from the IRS.gov website onto this PowerPoint slide as to the amount of tax credit an individual can qualify for. I want everybody to look at this slide here. Look at this slide and this list of credits. I tell you, it's only 24, but out of the 24, can you see yourself qualifying for all 24 tax credit? I'm going to let that sit there for a second. See, these tax credits and these tax deductions, they're not automatic. We got to qualify for them, which means we got to do certain things in order to qualify for them. Here's an example. Child tax credit. You don't automatically qualify for it. Guess what? You got to have a child to get it. Pretty obvious, right? Mortgage interest credit. Well, what you got to do to get that credit? You have to be a homeowner. If you're renting, you don't get that credit. Look at electric vehicle credit. That's if you're an owner of an electric vehicle. And if anybody like me, I'm a geek, I'm following Elon Musk, that Tesla vehicle, because I would like to own one. But if you're an owner of that vehicle, you get a tax credit. And what I found just on that vehicle, I don't know how the other vehicles are. If you're an owner of that car, you get a $7,500 tax credit in addition to you being able to depreciate it. But here's the thing. Look at that list, take a gander, and ask yourself, can you, on your personal side, qualify for all these tax credits? I don't think one person singly can. Here's additional slide that talks about your standard itemized standard deductions. Again, you have to do something to qualify for these. These are not automatic. These deductions and credits are not automatic. Now, looking at this list, do you qualify for any of these standard deductions? If you got student loan interest, okay, you qualify. That'll be an educational deduction. Gambling loss. If you gamble, you go out to bingo and you lose some money, and you can actually write that off as a deduction. I'm like, what? You can write off a gambling loss? A lot of folks don't know that, but it's written in the tax code that you can write off gambling loss. All right. So the two slides that I just showed you are standard tax credits and standard itemized deductions. All right. Those are just standard. Now, let me show you itemized deductions, itemized tax deduction for a business owner. Look at the list. And I think everybody would agree, looking at this list, this is part of our lifestyle right here. We living and breathing this every day. But as you saw on the previous two slides, none of them showed up on the list. Why is that? It's the way that the tax codes are written. We got, well, I'll get into that here in a second, but the tax laws are written for business owners. The tax laws are written for business owners. And as you can see, the tax codes is written so to where we can qualify, if we do the right things, we can qualify over 400 some different tax deductions. Legally, okay? Legally. So what do we got to do to qualify for these deductions? Very simple. How, say it? Here's the first thing. We have to have a business and run the business with the intent. Let me just say that again. With the intent of earning a profit. With the intent of earning a profit. I've been getting calls all last week before that, where they tax preparers, they doing their taxes. And then when our business partners, they claiming these deductions, the tax preparer is saying, you can't claim it because you didn't earn a profit. That's not true. That's a misinterpretation of the tax laws. The tax law is saying if you run your business with the intent of making a profit, you are able to qualify for those business deductions. Okay? Make no mistakes about that. It is written that if you run a business with the intent of earning a profit, you can write off these tax deductions. So that's the first thing you got to do. Here's the second thing. You got to work your business regularly and consistently. 3 to 4 hours a week is good. That's considered part-time. 3 to 4 hours a week. That's regular and consistent basis. Okay? Then the last thing you got to do, you got to keep good records. And we got the cash flow manager software that can do that for us. As long as we consistent with our record keeping, as long as we run our business consistently 3 to 4 hours a week, and as long as we have the mindset to run our business with the profit intent, we can qualify for all those deductions, for those 400 and some deductions. That's all we need to do. Now, to me, that is easy to qualify for those itemized deductions than trying to qualify for those standard tax credit and standard deductions in my book. To me, it's easy to do this. Okay? So, here's what 80% of Americans who's overpaying in taxes do not understand. This is the part where we got to help them, we got to educate them and help them understand there are two tax systems. The way that the tax codes are written, there are two tax systems. Here's the first one. We mentioned earlier, if you're an employee or you earning wages as a W-2 income earner, you're under this tax system. And as a result, you only be able to qualify for a few tax credits and a few deductions. Okay. I showed that on the other two slides there as your standard tax credits and your standard itemized deductions. So in essence here, you get very little tax savings. Okay. Here's the philosophy of a person in this tax system. You're an employee, so guess what? You're gonna work hard to earn that money, but you're gonna see it diminish quickly from taxes, and then now you got what's left over after working hard for it. That's the philosophy. That's the philosophy if you're in this tax system. All right. I think everybody would agree or feel the pain that this is what's happening with everybody. We work hard for the money. Then Uncle Sam comes in, get his portion of it, and then he say, "Okay, I got mine. Now you go live your life with what's left over." All right. Here's the other tax system for a business owner. Business owners get the ability to get tons of write-off. Okay. We want deductions. Again, we're in the business of getting deductions, not tax credits, because deductions give us the biggest tax savings, right? They give us the biggest tax savings. See, here's the list of all the things that you, as a business owner, we can write off. All of these are part of our lifestyle anyway. Why not make them business expenses? They're part of our lifestyle anyway. Make them, convert them into business expenses, and then let Uncle Sam be paying you instead of you paying Uncle Sam. Here's the philosophy for our business owner. Your business work, your business spend, and then your business is taxed at the end. See, whereas under the other tax system, you work, then you're taxed, then you spend what's left over. Now, I don't know about either one of y'all. I like this philosophy far more better than the other one. See, if you're a business owner, you get to tell Uncle Sam how much taxes you want to pay after you take care of all your expenses first. But if you're up under the other tax system as an employee, then now Uncle Sam gets to tell you how much you get to spend after he's taken his fair share out. So I hope everybody understands the philosophy in between the two tax systems. The tax laws break it down and break it down in such a manner to where you have this tax system with a set of laws and you have another tax system with a set of laws. We want to be in the right tax system so that way we can be on the road to wealth. We can't build wealth. Let me just say this. It is hard for us to build wealth if we're in the wrong tax system. I think we all would agree on that. We cannot build wealth if we're sitting in the wrong tax system. So this business allows us to get in the right tax system and then which puts us on the path of building wealth the right way. Okay? We just can't build wealth with just relying on our W-2 income wages by itself. There are some things we need to have running alongside of it that's going to help us. And so the things that we need to run alongside is business income and investment income. So we're not saying go quit your job. We're saying is let your job be your seed money to get your business, to build your business, and to build your asset portfolio. So now you'll get business income and investment income along with it. Okay? So recapping. Here's what's happening. If you in the in the first tax system, right? You basically are filling out a Schedule C. At the end of the year, you're doing a Schedule C short form. A Schedule A short form. If you're under the other tax system as a business owner, now you're filing what you call a Schedule C because you're capturing all your itemized deductions. Whereas on the Schedule A, all you're doing is capturing your standard tax credit and your standard tax deductions. And as you can see between the two, which one gives you the huge tax savings? It is not the Schedule A. If any tax professional come to you or tell you they can get you a bigger refund and all he's doing is preparing a Schedule A for you, short form that is, running the other direction because he's about to do something illegal. He's about to put one of those tax credits on there that you don't even qualify for, and then now you get caught up by Uncle Sam. Uncle Sam's like, hey, can you show me some documentation of you claiming this particular tax credit because you got a huge tax savings on it. And when you can't provide documentation, guess what? then Uncle Sam just gonna send you a friendly little notice saying you owe us X amount of dollars. No, yeah, he's gonna tack on some interest. Okay, so Schedule A, filling out a short form is not where we're gonna get the huge tax savings. You got to be repositioned in the right tax system so that way you can file a Schedule C every year, because that's where the huge tax savings is. Okay, that's where the huge tax savings is. Now, about to wrap it up here, but what I wanted to add this in here real quick because I want everybody to understand the difference between cost and value. All right, there's a big difference between cost and value. All right, we're in a position to where we have a business and we getting educated on finances or on money, right? But when we're out talking with other people, right, and we tell them, okay, you can become a business owner, and it's going to cost you $179 to get your business started. So we all know the first thing some of them going to come out is going to say, I can't afford it. Our thing is to educate them and show them that you can afford it, but through income shifting, you just your 179 is being given to somebody else. Let me show you a concept to where now income shifting can work on your behalf, which allows you to get that, show you where that 179 is going. Let's get that back. Let's use that seed money to go to start a business and grow. That's what we got to get crafty at doing, is educate them and show them it's not the fact you don't have the 179. You just giving away the 179. Let me show you how to stop giving away the 179. But look, let me do the math for y'all, okay?
Come on before you get sick. Come on.
Hey, let me get y'all to go on mute there. Okay, so real quick, I'm showing you my own personal testimony, right? I started this business back in April 4th of 2014. So I'm 9 months into the business. I started with 179. There are others here who came in under different prices. I started at 179. That's my cost. That cost is a one-time investment, which is a write-off, all right, a business write-off. So I immediately have a business deduction. All right, but here's the value. So the value is this. I was able to increase my cash flow, my monthly cash flow to $1,100. How? I went and adjusted my W-4. I correctly or properly filled out my W-4 and found that I was giving away $1,100. So I can stop right here and to show you that my 179 already gave me value. I was overpaying that. So if anybody do the numbers, if you was to do $1,100 divided by 179, it done paid itself already just from a W-4 adjustment. Okay, let's go a little bit further. It put me in a lower tax bracket. All right, y'all saw that 4.81 tax bracket after I had that $56,000 worth of business expenses. That was in 9 months, y'all. I accumulated $56,000 worth of business expenses in 9 months. I needed that because Uncle Sam was licking his chops, waiting for me to file, because he said, you look good on paper. I'm finna get you. Okay? But because of the fact that I had a business and I had those deductions, now those deductions allow me to get a $3,054 federal refund and a $2,700 state refund. And oh yeah, by the way, because I'm a business owner and I understand how the tax codes work, now I got access to about 400 different tax deductions that I be claiming year in and year out. So let's do the math.
What do you mean, Christy? This is my business.
All right, let me do this real quick.
No, I'm cooking the meat. I'm not bothering nothing. I'm cooking the meat. I mean,
Hold on.
Is it almost done?
Yeah, almost.
All right, I had to put everybody in presentation mode. I'll take you back off of mute once I finish here. We almost finished. All right, let's do the math real quick. So that's $1,100 in 9 months. That's about $9,900 from a W-4 increase. Okay. Then I got a federal return of $3,054. Then I got a $2,700 state return. So I got those two refunds from accumulating $56,000 worth of deductions. All right. So when we add the $9,900 from the W-4 adjustment, this is cash money coming back in my pocket, y'all. I just want to let y'all know this. Then I made $423 in 9 months in the business. So when you add them all up, that's $15,655 cash that came to me in 9 months. W-4 increase, business income, and the refunds. Okay? Now, here's the additional value to it. If you were to take $15,655 divided by the one-time investment I made of $179, this business done paid itself 87 times. That's the value. This business paid itself 87 times. From the W-4 increase, business income, and the refund. So, me personally, and if I were you all, don't get caught up on the 179 because the 179 is an investment. It's going to return. See, that's the thing. We got to understand that money going out and not coming back with value is just a cost. It's just an expense. But if money going out and then it comes back with value, then now we're in a greater situation when it comes to our finances, because we're getting value back from the money that's being released to the universe. It's coming back with greater value. See my greater value that I got there? The $15,655. And note, I only earned $423 in business income. So it's not just about the business income, it's about the business income and the tax savings along with it. And just in this example here, my biggest income came from tax savings. Yes, tax saving is income. Okay. The $34.95, the membership fee. You're getting these four things. You're getting the system, the strategy system, and software, which equals to our success, right? So let me do the numbers here. This is what you're gonna get for your membership fee. Right? This is what you're getting for your membership fee. And do know that this membership fee is a tax write-off. It's for your business. And as being part of this inner circle, what you're getting is invaluable. What you're getting is personal development and economic empowerment. Who is providing that right now? Who is providing both personal development and economic empowerment? These are the two most important things that we need in order to set our finances on fire. We need those two things. I'm a walking testimony of it, because 23 months ago, I had none of it. And as you can see, my before, is an exact result of what I needed, what I was lacking. And once I got personal development and economic empowerment in place and I started applying it, now my lifestyle changing financially, not just financially, but financially, mentally, spiritually, the whole nine. It changes things. Okay, y'all remember seeing that little post I put out there on our Facebook page, team page, right? We got to understand the big vision, and the big vision is understanding the difference between cost and value, right? And so when we understand the vision, now we can help others, see the value in what we do. All right. So last, here's the thing. We're in a position to where we're in the right tax system, right? But we got to educate those who are not in the right tax system. So the wrong tax system is going to give you limited tax savings. But if you're in the right tax system, you'll get huge tax savings. So we already made the decision, right? Where we want to be. We just got to educate others and ask them this question: which would they rather have? Okay. So, in closing, I leave everybody with this. Let's not use this as a cliche. All right. Let's not use this as a cliche. Let's be doers of it, because if we're doers, then at the end of it, there lies a promise waiting for us. Just know, having abundance requires being obedient. All right? Acquiring abundance requires being obedient. And so we get empowered all day long, but what are we doing with the empowerment? Is it going to work? Is the knowledge going to work? Okay. We got to put this knowledge into action. It's nothing. We can't sit here like sponges and soak it in and now apply it to our life. All right. So let's be doers of the word. All right. And let's be doers of the word. Any questions? Let me go ahead and take y'all off of mute. All right, I took everybody off of mute. So, do anybody have any questions about tax credit versus tax deductions?
Great presentation. I think you made it quite clear.
Is that Miss McKinney?
Yes, sir.
How you doing?
Doing good, doing good.
That's Miss McKinney down there in St. Petersburg, one of our new up-and-coming leaders down there. She says she's ready to set some things on fire down there.
Absolutely.
Awesome. Anybody else got any questions about the difference between tax credit and tax deductions? Questions going once? Going twice?
I have a question.
Okay. Who I'm speaking with?
This is Chris. I'm on the conference call. It's my first time. I hope everybody's doing well tonight on Sunday. Miss Alberta McKinney asked me to join the call. I think it was an excellent presentation. It was very informative and impactful, so thank you.
You're welcome, sir.
In regards to your business, in regards to taxes and the upcoming growth for more families and individuals or independent entrepreneurs having a home-based business, do you see an increase in opportunities for other people such as yourself to open up a tax office with a target market for upcoming entrepreneurs that have a home-based business to answer those questions that the other typical accountants or CPAs you get an H&R Block can't answer?
Absolutely. And here's the thing.
Absolutely.
I saw that there was a need. And so, and to be quite honest, you remember what I said, abundance requires obedience? Well, I wasn't being obedient. you know how God sends you confirmation that you need to be doing something as I've been commanding you. I was not obedient in that. Throughout the course of the year, when I first started the business, I've been getting confirmation that I need to help folks understand or help tax professional understand that we have small business tax laws that they're not familiar with. But a lot of CPAs and tax professionals say, well, Cedric, you know it just about as much as we do. Why don't you start a tax business? And I'm like, look, that's not on my radar. I just want to educate somebody. But then as throughout the course of the year, I kept getting confirmation. Then I just had this one aha moment to where I said, I need to go out here and do this, right? I need to help business partners who are having problem with tax preparers preparing their taxes and not understanding the write-offs that we're claiming. So yes, there is a huge, tremendous market for anyone who wants to start a tax professional business. Definitely. The opportunity is there. The only thing about it is, do they want to seize the opportunity? Do they want to take the information and seize the opportunity? That's all what it really boils down to. That's basically what I did. I knew I had the information, I saw an opportunity, and I just seized it. Anybody can do the same thing. Does that make sense, or did that answer your question?
Absolutely. I mean, in fact, that should have been the opening line of your presentation. It was so good, from what I hear from someone else listening with me. But yes, thank you.
Okay, you're welcome.
Thanks for joining, Chris.
Anytime, Alberta.
Any other questions? So listen, y'all, hold on, I see some folks typed in some questions. Let's see. Nancy Jones, very informative presentation. I'm getting more and more excited since I joined 2 weeks. Thank you, Nancy. Thank you. We'll try to keep everything informed. Listen, y'all. Who is this? I wasn't able to hear either, but said the presentation was on point. Thank you, viewer number 7. I don't know. Hey, who's viewer number 7 there? Just type your name in there for me, please.
I don't know. I have your phone.
The webinar sounds very low. Better if you call on the phone. Yes, that's the reason why. In the when I sent out the invitation to the webinar, you have the option of joining via the web or call in by phone, and both information was provided. You have the option of calling either or. You can view the presentation from your computer, but then if you want to hear the voice, you can call in from your phone using the dial-in numbers that I provided, okay? So here's what I'm going to do. I'm about to get back in training mode because I haven't, since the promo, been keeping me busy. But what I'm about to be training on now is, the next thing we're going to be training on is Rule of 72, how compound interest works, how to understand how investment works. We don't tell anybody what to go do with their money. We just show you how investments work. So now you have a good financial IQ to where now you can have a conversation with your financial advisor. See, the problem what we have now is it's a one-way conversation. So we were relying simply on just our financial advisors, telling us what they think should be the best advice. But just know that not all financial advisors has your best interest. You got to remember, they working for a commission. Okay? They working for a commission. So depending on what portfolio they're going to choose, they looking to see what they're going to get out of it too. But the main goal is you need to walk up in there with the basic knowledge of how investment works, right? So now you can have a two-way conversation. Here's the best way to understand that is this. The inflation rate fluctuates right at the top at 4%. You can go look it up, but it'll fluctuate right at 4%. Now, if you want to outpace inflation, you have to have investments accumulated for you, right? So if you have investment with a rate of return of 4%, and you know the inflation rate is 4%, are you seeing your money grow? No, they flatline it. So in order for you to outpace inflation, you got to double the inflation rate. So now when you're going to look for an investment portfolio, ladies and gentlemen, you don't want to be dealing with anything less than 8%. Why 8%? Because it doubles the inflation rate. Okay? That's all we really need to know about investments, right? For the most part, just to have a general conversation with an advisor. Hey, look, I don't know what portfolio out there, Mr. Advisor, but look, I know I need to outpace inflation. So if you give me anything 8%, less than 8%, it ain't gonna work for me as I want it to. All right. So we're gonna talk about Rule of 72 in the next one. After that, the next training is gonna be how to adjust your W-4, and y'all know I'm a numbers guy. I'm gonna show you if you don't adjust your W-4 and you keep overpaying in taxes. Let me show you what the number's gonna do against you. I show you my own personal one. Okay. I just showed you tonight my own personal situation. I had a lost opportunity of me sitting on $825,000 worth of investment right now had I not gave away $375,000 overpaid taxes.
Wow.
That's at 8% minimum. I got an investment portfolio right now where I'm getting 19.37%.
Oh, we must talk.
All right. After that, I'm gonna show. We're gonna go training on how a $5,000 credit card to where the bank will earn $35,000 extra off of a $5,000 credit card if you're making a monthly payment of $100 on it. The banks ain't your friends, y'all. I'm finna show y'all that through some team training. The banks ain't your friends. See, I'm not laughing at the ignorance. I'm laughing at the newfound awareness. All right. Then the last thing I'm gonna show y'all through training. I'm gonna show y'all what we call the number one asset. I'm gonna show you how you take when you convert your personal expenses into business expenses, and you just keep track of 7 common deductions. Remember, I said we have access to over 400, right? If you keep track of 7 common deductions, right, then I can show you to where those 7 common deductions can yield you $12,000 to $20,000 in tax savings. 7.
Wow.
7, y'all. I accumulated $56,000 in 9 months and didn't know what I was doing. All right. So we're gonna have some team trainings to do that because I wanna reinforce these things. So this way, I want to help y'all build some confidence on what you have, right? The type of education that you're gonna be getting while being part of this business. Nobody out here, and I won't say nobody, but very slim to none organizations or entities, inner circle, or what have you, are talking these principles day in and day out. These should be family conversations that we all been missing for 400 some years. We got to get back to educate. See, it's not about us, because here's the bigger vision. It's not about us. It's about the folks that are gonna come behind us, the next generations. Every time I get up and look at my daughters, I know I need to be doing these principles every day. Okay. All right. Let me before I get off, let me read couple of more comments here. Let's see. Jimmy, the webinar sound was very low. It is better to go. Okay, I already read that one. The viewer, Chanel. Hey, Chanel. I'm very excited with all the info I've gotten since I've joined. I'm ready to go out and educate those that need to know. Thanks for the presentation. Awesome. Thank you, Chanel. We still got to link up and talk, okay? Jimmy, awesome. Can't wait for the Rule of 72. Man, that Rule of 72 gonna wake something up when I show you 3 people who took $10,000. They all started at the same time. One of them gonna get $600,000. The other one gonna get only $20,000. You gonna say, I need to get compound interest working for me. But I'm gonna show y'all that. Any other questions, y'all? So this is exactly an hour that I ran through this presentation. I wanted to kind of lessen it a little bit, but I did get a little lippy. But I hope the information wasn't too overwhelming. But more team training is coming, right? So y'all just be prepared. Be prepared. Any closing announcements? Any closing comments? Issues? Concerns? Questions? Going once? Going twice? All right. Whether there's no questions, comments, or concerns, we're going to end the call. And I just wanted to say thank you all for allowing me to speak with you all and share what I've learned. Now, let's go do great things and share with others, because it's all about kingdom building. But we got to start individually before we can do anything collectively. All right? That's my time, and I will talk with everyone later. And y'all have a good night, okay?
Okay, you too.
All right.